have discussed investment in national savings certificates. In this part we will discuss investment in Senior Citizen Savings Scheme, SCSS. We are going to discuss what is Senior Citizen Savings Scheme, SCSS. Features of Senior Citizen Savings Scheme, SCSS. Advantages and disadvantage of investment in Senior Citizen Savings Scheme, SCSS. SCSS is for senior citizens who are 60 years or above on the date of opening of the account. Also, people with 55 years of age who have retired by VRS can open SCSS after 3 months of retirement. Benefit of the scheme not available to NRIs and HUFS. Minimum investment, Rs 1,000, while maximum investment, Rs 15 lakhs. The joint account can be opened only with your spouse. There is no age limit applicable for the joint account holder. The account may be extended for a further period of 3 years. The interest is paid out quarterly. The interest is 9.2% applicable with effect from April 1, 2013. No partial withdrawal is permitted before 5 years. Account can be closed at any time after the expiry of 1 year from the date of opening of account, subject to following conditions. In case the SCSS deposit account is closed after the expiry of 1 year but before the expiry of 2 years, 1.5% of the deposit amount would be deducted and the balance paid to the depositor. In case the SCSS deposit account is closed after the expiry of 2 years, 1% of the deposit amount would be deducted and the balance paid to the depositor. The depositor availing the facility of extension of account may be permitted to withdraw the amount from the Senior Citizen Savings Scheme and close the account at any time after the expiry of 1 year from the date of extension of account without any deduction. SCSS account can be closed after 1 year, with penalty, but in case investor have availed Sector 80C benefit, it would be reversed. Any retired defense services personnel is eligible for SCSS irrespective of his age. There shall only be 1 deposit in an account and that too in multiples of Rs 1,000. A person is allowed to open multiple SCSS accounts. In case the depositor neither closes the account on maturity nor request for extension within 1 year, the account shall be treated as closed. And in such cases where the account is closed and the amount has not been withdrawn, interest as applicable on post office saving account shall be payable on maturity. In case of death of the depositor before maturity, the account shall be closed and deposit refunded along with interest on an application. In case it is a joint account, or where the spouse is the sole nominee, the spouse may continue the account or may close the account. Advantages of investment in Senior Citizen Savings Scheme, SCSS. The interest is paid quarterly to the saving account, hence can serve as regular income for retired. Redemption on maturity comes directly to bank account or through post-dated checks. The SCSS carries a sovereign guarantee for principal and interest payments, so it's the safest investment. Disadvantage in Senior Citizen Savings Scheme, SCSS. The interest from SCSS is taxable. Bank would deduct TDS if the total interest in a year is over Rs 10,000. Hope the presentation is useful for you. Your feedback is important for us. Write us at tldcdeli@gmail.com. Call us at 0999-988-2345. In the next part of How to Save Tax, we will discuss investment in tax-saving fixed deposit. Never miss a chance to view new videos. Subscribe our channel. Currently the subscription is free. Now once again, for those viewers who have not viewed the earlier parts of How to Save Tax, let's shortly take a quick view of summary of some of important investment for tax saving. Maximum of Rs 1,50,000 deduction for income tax is available by combining investment in these three sections. Section ABC, Section ADCCC for pension products. Section ADCCD 1. New pension scheme. ADCCD 1B. Additional deduction for amount contributed to NPS of up to Rs 50,000. ADCCD 2. Employer's contribution under Section ADCCD 2 towards NPS is outside the monetary ceiling of Rs 1,50,000 deduction. Following options are available for deduction under Section 80C, 80CCC, ADCCD 1. The maximum deduction combining all these investments for expenditure is Rs 1,50,000. Investment option, DEB. Provident funds, EPF/BPF. Public Provident Funds, PPF. National Savings Certificates, NSC. Senior Citizen Savings Scheme, SCSS. Tax Saving Fixed Deposit, for 5 years. Investment option, Other. Life Insurance Premium. Pension Plan from Insurance Company. New Pension Scheme, NPS. Tax Saving Mutual Fund, ELSS. Sukanya Samriddhi Account. ULIPs or Unit Linked Insurance Plan. Other investments. Tax Saving Expenditure. Principal payment on home loan. Stamp duty and registration cost of the house. Tuition fee for 2 children. Tuition fee for 2 children.